macro market trends, stock selection, ETFs, options, just some of the topics covered in Tactical Trading. This week we learned that Warren Buffett plunked down over $10 billion into IBM shares in the third quarter. Let's talk with our tactical trader Kevin Cook now to see if we can find out why the Oracle of Omaha has finally discovered tech investing.
Yeah.
So as I said to you before we started rolling here, he's always prided himself in saying that he invests in what he understands. So he finally understands this now?
Yeah, I mean, that's what I found sort of hilarious about this on many different levels, is that he claims he's read their annual report every year for the past 50 years. And we know he's avoided traditional technology, and he's finally come around, to IBM as the blue chip here.
Yeah, but $10 billion is a respectable amount of money.
Exactly, yeah, so nothing funny about that, right? But
yeah.
Still, Warren Buffett, he's the investor most people admire, right? Mm-hmm. But he's a regular guy. He's plain spoken, he's down to earth, and he's humble enough, to admit when he's wrong. And he's saying, hey, okay, I finally get it now. And so what does he get about IBM? I think one of the things that reached out to me that he latched onto was that IBM is in technology services, and they're so good at it that their customers never want to leave them. They would find it so costly to leave. That's how good IBM is at services. So what does that translate to Buffett's style of investing? It translates to a moat, right?
Okay. Makes sense.
Yeah. So one of the other things I found a little bit humorous is that I actually latched onto IBM myself a couple years ago. It was my safe money pick for 2010 to outperform the S&P for the next 3 years. Okay. So let's take a look at how we did here. Right. For most of 2010, IBM and the broad market, the S&P 500, were neck and neck. But the divergence really took off in 2011. As stocks got weighed down by their own crises, IBM held up. And you're looking at least a 4-to-1 outperformance, IBM versus the broad market.
Okay. That presumably not because it took you that long to understand it.
No, and I liked IBM also because I knew they were dominant in services, but another thing that I'm still trying to understand is the whole smart grid.
Okay, so that leads me to another question. The smart grid, the energy cloud, we hear these terms thrown around, all the time. Mm-hmm. They seem vague to some people. They seem kind of mysterious to other people. I'll be in that mysterious camp. It's like, what the heck is this all about? See, can you help us break it down to understand it better?
So IBM is technology services. They found a way to help municipalities, whether it's a local government or a state government, manage energy by monitoring it. So let's take a look at something here. This is from the IBM website. This is their estimates of cost savings as they help a city, a town, a government implement energy monitoring. So first they monitor, then they connect participants, whether it's the business or the home, to the municipality. And they're constantly monitoring energy levels. Where is the usage needed? When is it not needed? I mean, think, for instance, at your home, what eats the most power at home is your water heater, because it's always running, right? Unless you have a smart one, unless it's being monitored to say only kick up the water temperature when you're going to need it in the morning for a shower. So those kinds of things also apply, obviously, to major industrial businesses.
I'd have thought it was the 4 televisions that run all the time, but maybe I'm wrong. I don't know.
And so at year 10, for a 2 million municipality, a major city, IBM estimates that they can save them $600 million a year.
Okay.
So $6 billion in savings, over 10 years. The other thing here, talking about the smart energy grid for IBM, is that at IBM, what spoke to me a couple of years ago when I looked at this is that this wasn't just a theory. They already had dozens of contracts around the world, especially in Europe, in Asia, with governments, whether it was a small town or a major city, to say, hey, we're going to come in here and build the smart grid for you, monitor your energy use, help you be more efficient, save the government money, save corporations money. And this is just a map of 14 cities that are in their Global Intelligent Utility Network Coalition. And you see 3 European cities. They actually serve about 20 European cities and maybe another dozen Asian cities. And you think, okay, well, what if Europe implodes and goes into financial crisis? Well, I don't think this business is going to go away, because these municipalities, what I say, IBM is not only plugged in, but they've embedded themselves in the energy infrastructure.
Okay, that's a good point.
Yeah.
So you bought IBM at 125. Buffett's bought it around 175, right? So then does the logic follow that everyone else should be a buyer at 190?
Yeah, IBM's trading 190 now. And, that's the other thing that I found humorous is that, wow, Buffett likes IBM now. Should we rush out and buy it at 190? Well, I'm not so sure. Remember, Warren Buffett, nobody's long-term is like his long-term, right?
Yeah,
When he buys a business and somebody asks him when are you going to sell it, he's like, I don't know, I never really thought about it. I just thought about owning it forever, right?
Yeah.
So that's his long-term. So let's look at, what kind of business are we talking? This is IBM's, one of their mottos is they rethink IT and it reinvents business. And so who are they? They're enterprise technology services. We talked about that. They got out of PCs and hardware a long time ago. They realized what business they're in. One of their primary models is what they call service-oriented architecture. So they're building IT intelligence for companies, whether that's attached to a smart cloud, an energy cloud, or whatever. And I talked about this, how they're embedded in the infrastructure in a power grid, in a municipality, in a state. They just entered what they call global financing. So they're going to have a business unit like a GE, where they're going to finance. Hopefully they don't get in trouble like GE has over the years, and they finance good projects. So fundamentally, we're looking at a 14 forward PE, just over 10% growth, which translates into a PEG of about 1.3. I would not advise people to run out and buy IBM at 190 right here. I'd wait for the pullback. I'd be a buyer at 175 for sure.
Okay.
So that's my take. One more point on the energy outlook. IBM looks at it like over the next 20 years, the Earth's population is going to grow by 750 million people. We're projected to go to 9 billion by 2050, but just over the next 20 years, at least another billion, right, or close to it. Energy demand, in IBM's view, is going to soar at least 40%. I think they're in the right business.
Okay. Always interesting stuff from our tactical trader, Kevin Cook. You can see all of his columns on Zacks.com, linked to off of our homepage, Zacks.com, if you're not already there watching this video. And you can also follow Kevin on Twitter at Kevin B. Cook. With Kevin, I'm Terry Ruffalo.